Gold traded in a fairly narrow range as I shared in the morning analysis 1992-2002 zone. Precisely it is traded in the same levels. Likewise US crude has taken a bit of dip, but yes, it's still 75, 76.5, 76.6 levels are yet respected. So what to expect with the US session, which position you should take in order to profit trading gold and crude oil, we will see with the help of charts and indicators. Do not forget to like, share, subscribe and comment. Do not forget to press the bell icon which keeps you updated with the twice a day analysis. You can also be part of my free Telegram channel where you get the live update. The link is mentioned in the channel and video description. Let's start first to look into gold followed with crude oil. Do watch till the end. Do listen to it carefully. Note down the levels. Trade as per the levels. First, let's have a look at the hourly charts for gold. And here you can see that there is a clear cut wall at 2000 and 2002 levels. It needs to break past 2005 rather, I will say, in order to confirm the rise. But yes, wait for 2002 itself is a good level for you to enter. However, I will recommend safe traders to enter only about 2005 where you can expect 2010 and plus levels. Now see how it has behaved. You can see this. It has finally breached this levels at 1992 after a bit of consolidation throughout this day. Now this indicates that there is slight bearishness which might pull the prices little lower. And how low it can go, see, if you divide this into two, you can find out that possibly if it breaks past 1992, stays below 1992, you can expect that we might see it hitting 1985 1980 levels, which is a very strong support zone. Rather, I will say 1988 84 80, these are the support levels, and below that we might see it hitting the lows for yesterday. Now see, right now if you look at, see, higher lows, higher highs, that is what is the channel in which it is trying to trade. This is a retracement zone, and possibly a break, any break below 1980 is something which is going to bring more bearishness today, and hence you should be watchful of that. Now till 1980, what you should do, I will recommend you to sell at 1992 and wait for it to break past. See, put a $4 trailing stop loss till 1980, and once it breaches below 1980, then only bearishness may prevail. Now see, on the hourly stochastic it is looking downwards, and see the MACD has crossed over. This is trading with divergence. This is the first red candle. Possibly we may see a follow-up candle. RSI has also started to look down and it is trying to show slight bearishness. Now look at 2-hour charts. Now see, on the 2-hour charts you can see this. Look at these 4 candles, and if you look at these, you will find higher highs, higher lows. So now support coming in at 1980, very strong. Yes, if it stays below 1992, you can stay short, and possibly below that 84 80 levels can be seen today. Hence you can stay short there. At the same time, a buy entry about 2005, the same levels we can see here. The stochastic is looking downwards now. The MACD is trying to converge crossover. It is still in green. Remember this point. RSI is also looking down, trying to trade slightly bearish, but this is only the first red candle here after. Now look at the 3-hour chart. See, possibly it is trying to create a symmetry. Certainly lower highs are seen, and hence wait for it to break past 2005. That is the level beyond which only further bullishness may prevail. Right now, if you divide into two halves, you can see this candle might take it below 1990, and then the next candle might take it below 85 levels. That is what I will expect. This is trying to create a symmetry. This is trying to trade in, and hence the bulls or the buy entries are only recommended if it breaks past 2005 levels. Stochastic looking down. The MACD is also trying to converge. It has seen good greenery there. The RSI is also trying to look downwards, trying to trade slightly bearish. Now look at the 4-hour charts. On the 4-hour charts to see, first of all, look at this higher highs, higher lows, and if it starts to look downward, certainly 1980 levels are going to be the safe levels below which only bearishness is going to be seen. So same observation what we had seen on the early to early 3-hour charts. The stochastic is near to overbought, trying to look downwards. The MACD has been trading in green, now trying to converge here. RSI has also started to look down, trying to trade with slight bearishness. Now look at the daily charts. Now see, firstly look at the daily charts. You will find, see, these 4 candles beautifully connected. The lows are beautifully connected. If you draw a straight line, you will find the zone here at 1980 1975 levels is going to play a very important role. At the same time, if you look at the high, see, lower highs are done. So what it is trying to do, it is trying to consolidate. See, also the 20 period moving average giving it a support at 1992 levels, below which you can expect a further drop. So if it stays below 1992, you can expect 88 84 80, and then below levels. So the same levels what we had discussed so far, the stochastic is trying to look upwards, showing a little bullishness. However, look at MACD. MACD is trading with divergence, trading bearish, and see the crossover has happened at a higher level. Possibly it can stretch a bit on the downside. RSI has also dropped a bit. Considering this, I will recommend the same levels, sell at 92, buy at 2005. In fact, you can try to attempt a buy at 2002. However, that is a risky trade. You should wait for it to break past 2005 in order to confirm a rise. Beyond 2005, wait for it 2010, 2015, 2020. Only about 2020 further bullishness is going to be seen. And for the day, if it breaks past 1980 on the downside, yes, below that you can expect little bearishness. However, 1974, 1970, these two levels still you should watch out for. Take your trades accordingly. Trade as per the levels, trade with the trailing stop loss. Now let's have a look at crude oil. And yes, before we proceed, if you want to learn this of trading profitably, you should join my mentorship batch. The 21st batch starts on 1st of May. Register yourself now itself. Reach out to me for more details. My Telegram and email IDs are mentioned in the channel and video description. Now look at crude oil. See consolidation, drop, consolidation, then consolidation, and then this is the breakout. See, this is the first breakout candle. It can stretch the drop. It can try to complete the gap till 75.9 levels. Possibility exists that it may try to fill the gap. See, beautifully retracement is done, and this is the first breakout candle, and hence, as I shared in the morning update, below 77 one can stay short, and precisely it is achieved now the lows for the day. Now if it stays below 76.5, you can stay short for the there you can expect 76 or 75.9, and below that further drop. So for the day, sell at 76.5. Now see the stochastic on the hourly charts is back to oversold zone. The MACD is trying to cross over for a sell here, and the RSI is again looking down. And if you look at the 2-hour charts, likewise on the 2-hour charts, see a symmetrical formation, and it has achieved the bottom, the previous lows. These lows are almost at the same levels, and hence if you see it trading below 76.5, you can sell and then wait for it to break past 75.9, which will bring further bearishness. The stochastic looking down, the MACD has started to diverge. This is trading bearish. The RSI is also looking down, trying to trade bearish here. And if you look at the 3-hour charts, on the 3-hour charts, likewise, see symmetry here and then consolidation. Now retracing here again on the downside. So it is trying to take a break. Certainly we might see 75.9 levels. That is my expectation. And in fact, below that further drop can be expected. So sell at 76.5. Stochastic looking down. MACD trading with divergence and bearishness. RSI trying to look down. Now look at 4-hour. Similar is the observation on the 4-hour charts. Couple of red candles retracement, then second red candle, and it can stretch the drop for a little while. So yes, stay short below 75.5. 76.5. Stochastic looking down. MACD is trying to cross over for a sell here. It was trading in green so far. RSI has also started to look down, trying to trade bearish. Now look at the daily. Now see, just wait for the previous lows, that is 76.5 to breach, and below that 76.2, 75.9. See the gap here. This gap might get filled today, and below that you can expect a further drop till 74 level. 74 is now the next strongest support. Now this zone completely between 74 to 76 is a rescue zone for crude oil. Let's see if it sustains above those levels. Stochastic has come out of the oversold zone, trading comfortable, but yes, look at MACD. This is trading with divergence. This is trading bearish. We may see it dropping a little lower. On the downside, you can see RSI is also trying to look down, and hence stay short below 76.5, and you can expect 75.9 first target, 75.45 the next target, and then 75. Below 75 it is directly going to land at 74. So take your trades accordingly. Trade with the stop loss, trade with the trailing stop loss. Do not forget to like, share, subscribe, and comment. Join my mentorship batch, join my signal channel. Reach out to me for any of your trading or training queries. My Telegram and email IDs are mentioned in the channel and video description. Thank you very much. Have a great profitable trading day ahead. Thank you.